Hey, good morning. How you doing? Just a reminder, today is a holiday and the markets are closed. Hey, you want to trade anyways? Well, we can do some looking anyways, right? Yeah, happy President's Day. All right, so welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Today we're conducting technical and fundamental analysis with the overriding goal of putting together trade plans. Once again, the markets are closed, banks are closed, stock market's closed, bond market's closed. But what the heck, we're here anyways, right? So why don't we go through the yen pairs, the dollar pairs, gold, oil, Bitcoin, and anything else that you request. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Oh my God, Raymond showed up today. What's going on, Ray? Welcome, good morning. So hey, everybody. Like I said, ask questions, get involved. I've been doing this a while. I can share some experience. Technical and fundamental analysis are all fair game. So let me help. Are you coachable? Let me know. Are you approachable? Hey, I'm approachable. Look at, I'm wearing cashmere today. Nice and approachable. So ask questions and I'll see if I can help. One piece of advice right off the bat is you're going to need an execution partner, which we call a broker, to enter your trades into the interbanking system, one with competitive fees, fast execution speed, one that actually pays you your swaps, but ultimately one that has earned your loyalty and respect. All of that is available at tradersway.com. They earned my loyalty and respect many years ago, and not through banner ads, but by how they behaved in the actual market. So visit tradersway.com and give them an opportunity to earn your loyalty and respect. Makes sense, right? King's a supermodel. I used to be a supermodel. Not anymore. Hey, what's the aim of this channel is a question. Okay. To teach you how to use both trader psychology, fundamental / macroeconomics, and of course technical analysis to put together trade plans. Instead of reacting to the market, you plan ahead. Okay? So for me to preach and teach. All right, so anyways, we have some risk on, risk off. Risk on, risk on, risk off. Risk off, risk off, risk off. Okay, cool. So let's take a look. Okay. Top of the market here. Okay, we have this caught in a range. One of the conclusions from last night in the swing trading group was you can only, right? You can only sell there. And then we have a little bit of little stuff here. And then, of course, the main event is at the bottom. Okay. Okay. Try not to get stuck in the middle. there's a little bit going on here, as you can see. But I think the bigger decision is deciding, generally speaking, whether you're a seller at the top or the buyer at the bottom. Don't worry about in the middle. If it breaks resistance, it'll likely become support. Or if it breaks support, it'll likely become resistance. So don't worry about that. Just recognize the current trend is sideways. Okay. And the reason being is the Bank of England's raising interest rates, and so is the Fed. So they're going to offset each other. So be careful on that one. Okay. I mean, you can go back and connect as many of these as you want. Okay. You want to hear a real sad story? I had an order here and I had an order there, and somehow they just all got clipped and then came back down. Unbelievable. So I had traded before I traded technically. And then after I traded, turns out the news is reporting Biden and Putin are going to meet in a summit. And then I wake up in the morning and find out, yeah, they've agreed in principle. I'm like, talk about misreporting. Okay. Talk about misreporting. So anyway, so now it's coming back down the other way. It's so funny. So unfortunately, news, aka volatility, because remember, news is not fundamentals. Okay, so news creates volatility. Great. So the vol caught me on this one, and so I'm going to have to kind of rebuild my position. Okay. So too bad. Okay, so you can see the plan from yesterday. That's the general idea. That's the most aggressive plan. I had another one on a psych level somewhere. I can't remember, but I don't know. Maybe plan B was just standard. Like, that's a standard operating procedure, right? So nothing complicated about that one. So, oops, if I can grab this, will it let me? Yeah, no. There we go. Okay, so that's a standard operating procedure. Nothing interesting about that. And in fact, you can continue this double bottom, lower low, okay, lower high. And then, well, it's a higher low. I get that. But anyways, I'm trying to, maybe even on a higher time frame, it's just down, up and down. But that's what the plan was. And this vol caught me. And so now I got to try again and get back in. Okay. So that's going to be a general outlook across the board here. Okay. I have this the other way for those that are bullish. Once again, if you are bullish, you're not bullish on the Aussie, but you're bullish on macroeconomics, which you would argue might be the same and whatever. The first part of global macroeconomics is cash flow. And so the cash must flow first before the Australian economy benefits, right? Like, cash flow is instant, but it doesn't instantly add jobs, for example. It doesn't instantly add wage growth. Okay? So anyway, so this could be your China play or your dollar weakness play. Right now, though, you can see, and we've had a mark for quite some time, it's not breaching resistance, but it is trending up. Okay? So right now, I think I would connect these, and I've already marked this last night, but you'd have to drag this across a little bit. And I think you probably have it trapped this way now. Okay. And if you notice where the daily selling pivots are, because I also have this chart set up from a bearish point of view, because it's a discussion. This chart will never tell you to be a bull or to be a bear. If you were a bear, this was the optimum selling price for the week. And you'll notice that that's not a great price. This is also the optimum selling price for the month. And also we're not quite there yet. So there's a lot of room to allow this to kind of finish whatever consolidation it needs to do and then start trading breakouts. Okay. So what that does is it puts your strategy into a range bound strategy, which means if you're more bullish than bearish, you're buying it on the bottom. Okay. And if you're more bearish, right, then you're selling it off the top. So maybe there was a chance both yesterday and today, right, last night, Sunday afternoon, Monday morning, for a bull or a bear to do what they needed to do. But I would point out technically neither were really that great. So this is, right, I would argue, even though it kind of moved up quite a bit on the news and then it came back down based on what it should have done in the first place, it's quite mediocre altogether. Okay. It's quite mediocre, right? It's not a good weekly. It's not a good monthly, so on and so forth. Okay. Here's the resistance I identified last night in the swing trading group. Okay. Now we're topped off pretty close to that resistance. And it's just farting around. You might argue that it's riding the 21. I kind of need it to build up onto the 21. What I'm kind of looking at here is sort of a bottom formation. Higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, 100% retracement. Okay, and when I see hundo P's, okay, this distance here, it's a red flag. Okay, because what can come next, not that it will, but what can come next, of course, is consolidation and then downward movement. So the only hope right now for a bull is that this pops this up. But I wouldn't bet on that after it pulled back this much. So to show you an example of how a trader would probably be normally setting up a higher high, higher low, they would fib it. Okay. And if it was bullish, and maybe this is just due to the holiday today. Again, in the United States, there's a banking holiday. The stock market, bond market, and banking industries are all closed. So maybe in a normal market, you would have something like this, okay? Or something like this. But having it drop all the way down, that's not cool. Okay? Technically, that throws everything off. Okay? And presents an opportunity for bears. Okay? Okay? So, okay? Maybe it's just waiting. Like I said, maybe it just needs tomorrow, okay, to come along. You'll see the one sort of saving grace here for bulls is that maybe it's kicking off this 4 hour. And you can see I already have the next target. Okay. So if you're not in on that drop based on a bigger trade plan you would have done last week, then I'd be careful, at this elevated price. Okay, you see this? You see this line here? Okay, again, this is something I covered last night in the swing trading group. If you go further out, you can see how important that price is. Okay. If I'm looking at it from a day trade point of view, it says be prepared for a significant drop. Okay. Probably not a lower low. Now, this made a lower low, but that's not what it says. Okay. You have to understand that. What it says is be prepared for a bounce here. Okay, on that time frame. The reason it actually fell, well, first of all, you have to understand the consolidation. Okay. This is the new move that typically happens. Wait, no, actually, that's not correct. Anyways, forget that. Erase all that. This move here is pretty standard seasonal. Okay. That's a pretty standard seasonal move. This is pullback actually is fairly seasonal as well. And then having this drop now for 3 weeks to a double bottom and then pull back up, which is actually what this says. That's what that 55 means. All of that actually fits the seasonal model. Now, I might be squeezing it into my bias, right? Confirmation bias is what they call that. And I understand that. But what I would have told you, years ago even, that January would bring this thing down. Feb would be, much more up than January was. And then March would be back down. And then April would be back up. But it would be up April, it'd be up May, and it'd be up June. Well, this is the January down, the February up, the March down, and then April, May, and June to follow. So that kind of all fits the model. But remember, we're not trading the model. We have to trade reality. So that says be open-minded for this to reverse on a smaller time frame. That's why I have it marked. It could fall for quite some time. 4 weeks, for example. And then down here, you'd be very open-minded to a double bottom. Okay? So there's lots of sort of, those are basically, this is a position trade down and a position trade up. Down for a month, up for 3 months. Okay? So is that going to happen? Oh, how do I know? Okay? So that's why you use technical analysis now to confirm all this. Okay. So a lot of people then get caught up on this time frame. They're like, but what does this tell me, Wayne? Or what does the 1 hour tell me? Should I buy it off this 21? I would say, well, go to the day chart first and tell me what's going to happen next. What's your plan? Okay. So if your plan is, oh, we're just going to cut through all this like a hot knife through butter, then, okay, buying a dip off that 21, sure. If you're like, well, I can see the argument here, Wayne, of this kind of rotation back around, I would say, okay, well, looking at that, it might take 2 or 3 days, but it would start soon, maybe slightly up, a little bit of a higher high, and then a collapse. And I'm like, okay, cool. So now how do you feel about the 1 hour? Okay. Okay. Well, if you had that in mind, really think about it. If you thought this, let's say 1 week ago, I want you to go through your own thought process here. If you had done that analysis a week ago, and you said, well, around here, around the 67, maybe 68 price zone, I would expect to see a reversal to the downside, and that would last about a month. Hey, that's a pretty legit call, right? Then we get here this week, pretty close to your price, and the first thing you spot is 100% retracement. And then the second thing is the potential for a double top forming. And if, let's say it does break the 21 and then starts doing stuff like this. Like, at what point do you get on the clue train? If you had already thought about this a week ago, as it was rising, you said, yeah, somewhere around here, this will rotate back down, but it'll fall for 4 weeks. It would influence your decision-making process now, wouldn't it? And to the new person that came in, what's the point of this channel is I want to teach you how to think that way. Okay. What do you think? Okay. Is there anything fundamentally that could challenge this in the short run? Fundamentally. This is Kiwi dollar. Okay. And we would look for a rotation for Kiwi dollar weakness, US dollar strength. What could challenge this hypothesis? AKA, what would make this go up instead of down? Yeah, rate hike this week. Yeah. So pay attention. Gee whiz, this makes me sick looking at this. Can't believe it. Jeez, I'm crying. Stupid. I go nuts when I buy dollar and I lose money. Shit. Anyways, here's another one, sort of, right? You see, very range bound in the moment. Okay, so trade it sideways. Let's do gold, oil, and Bitcoin. Oh, thank you, Roger. Lean and flawless. Hey, that's pretty good. I'll take that. Thank you, man. Yeah, Darker, but I was just talking about dollars specifically, right? You know, one interesting thing is Australia opened its borders again. The first airplanes are landing right now with foreigners. How interesting is that, huh? Okay. Yeah. So anyways, take a look at this. This is Bitcoin coming down, which is great because somewhere, I think in here, I bought Bitcoin and I exited here. It only took about a day and a half. I think I made 5%. And then I bailed. And of course, my position was so large, I crashed the entire cryptocurrency market. And now it's down here. Hey, man, brother's got to eat, right? So anyways, sorry, everybody. Now, the interesting thing is, right, like 1 year ago, there was 100 million cryptocurrency accounts. Right now, there's 300 million. And in a year, there'll probably be 1,000 million, what we call a billion. Isn't that amazing? No, Bernd asked about FX Bootcamp. FX Bootcamp's $88 a year because I want as many people to have education as possible. And I think if you pay the $88, you'll feel like you got $1,000 worth of education. I want you to feel that way. The other groups, or $99 a month. And for most people, that's accessible as well. It's not, thousands of dollars up front and stuff like that. Okay. So anyways, interesting, right? Now, I told swing traders last night, which is a combination of swing traders and day traders, okay, what week I expect this to go up. Yeah. In fact, they have a particular day in mind, but the day is sort of generalized. It's really a 1 week window. You could even argue a 2 week window, but anyways, to expect a reversal sort of like this, turning this way. And that's one of the things, that gives you a taste of what we do in the group is we set up plans and stuff, but we have an opportunity to talk about bigger things. Okay. So it's Black History Month, for example. I never brought it up last night in the article because I don't know how important it is or not, but we were discussing this guy who happens to be an African-American man, black man, who, oversees $7.7 trillion. And I thought his interview was fantastic, and his answers were very intelligent. Right? And so that was another thing we covered last night. And I got all these magazines. I can recycle all my reports. Anyway, so we do some cool things. Is that right, Roger? Cool. Wait, isn't Christmas over, though? Well, I guess for this year, right? Right on, Bernd. Cool. Anyways, anywho, so this is, right? This is a pretty generalized idea of risk on, risk off. Okay, like for example, everybody was prepared for risk off starting that particular day. This I wasn't looking for, so I'm not trying to tell you that I'm right all the time. In fact, I lost money last night doing the right thing. So even then you can lose money. Okay, so this I did not expect. That's Omicron. That's almost like a black swan. It's an exogenous shock that is not technical or fundamental. Okay, this down was, okay, then what? Okay, then starting February, risk on. Okay. By the end of February, I said we'd be back to risk off. Very, very cool, right? So this makes quite a bit of sense. Okay? So I'm emboldened, dare I say, that we have some pretty normal seasonality here. And if it continues to generally follow, and by the way, last year, except for this move, I think was nearly spot on the exact seasonal model. Okay. Okay. Except for Omicron, everything else was tickety-boo. Okay. And by the way, I plan my family vacations around seasonality, where I'm like, okay, look at the time. Time to take profit. Let's go surfing. And then the market stops moving. So either I truly am so big I can stop the entire trend of the entire foreign exchange market, or there's some reasonably repeatable patterns going on inside the chaos, if you will. Okay, cool, right? So anyway, so swing traders know when that's going to go up, and that might be helpful because it's a shape. It's in my book I talk about in your mind's eye. If you truly have done your research and your technical analysis and you've truly created a strategy. And in fact, we revisited this idea last night of you start at the high time frame, you come up with a strategic plan. By strategic, I mean a combination of technical and fundamental analysis. You should be able to actually print the chart out and put it on the wall in front of you so you can see it while you're staring at your computer. So while you're chewing at your fingernails because you feel like you need to be pulling the trigger, you're like, man, I'm sitting here doing nothing. I need to throw down a trade. You can look back up and say, no. Here's the strategy. And you look at that, you're like, oh, okay, I should relax because we're not quite there yet. Okay? That's what a strategy is, right? And so you should be able to plan ahead. And then when you're in an opportunity to trade, you recognize it because you've been thinking about it for days, maybe even weeks. And now you're at your price zone and now you're looking for reversals versus just trading price action. Okay? So like Bitcoin's coming down and that makes sense to me. Okay? Flo asks about gold. How many people here want to hear about gold? Okay. Okay, we'll clear that up. Let's do this trade. Do just confluence. Okay. Okay. There may have been a change. We don't know. So let's start with connecting the tops. Okay, let's connect these tops and then connect this last one. Okay, I guess further up should be important. Okay, when do you buy gold? And the standard operating procedure for that question is to answer it by saying when there is high inflation. Another way of looking at it is high inflation followed by potential slow growth. Okay. And by slow growth, you can mean economy, but you might also say if the stock market's growing 4%. And okay, so we'll say stocks. I know I spelled that wrong. I know. And then we'll say inflation is 5%. So now you have a real return that's negative. Okay. Mike says, what about a peak in S&P 500? Not for about 6 or 7 years. So anyway, so now you have a real return that's negative, right? If you did your stock return minus inflation, you've actually lost 1%. So what tends to do well? What kind of investment tends to do well in a market like that? Things that are real. Not financial investments, but real investments. And by real, I mean real estate, okay, physical gold, and well, we'll just say gold, okay, food products, like let's say wheat, corn. I'd spell sorghum, but I don't know how. And how about energy? Okay. Oil. Gas. So now we're getting into that point where, back here, inflation was 5, but the stock market was 20. Okay. So now inflation is 7, and right? And the stock market, I would guess, would only go up 7% a year. Some people are saying 4, but currently is down, let's say 10 for NASDAQ, or -5, I think, for the S&P, right? So that's when you're like, okay, now some gold. And it wasn't the case back in here and wasn't the case back in here. The previous rally was different. Okay? This previous rally, especially this move here, that was central banks. So now if we're getting lift off now off of this level, so let me draw this in green to kind of, because I know this is gobbledygook. Okay, but anyways, this higher high now is not the same. It's different buyers completely. Might still be institutional. It might be retail, but it's not central banks. Okay? But you might hear in the news, it's a rally because we're worried about Russia attacking the Ukraine or something like that. That is, there's this idea of causation and correlation. Does that risk cause gold to go up? No, not really. But it's going up and there's this risk. So the media looks at it and say that, well, they must be related. They're not related. I mean, they are related, but it's this idea that if you eat enough ice cream, you will make it warm outside. Because we know, you can see, the more ice cream that's sold, the hotter it tends to get outside. So obviously, ice cream makes the weather hot. And you're like, whoa. Maybe people buy more ice cream when it's hot. Okay? And they kind of get the relationship backwards. But do you see right? There's a correlation, but there's no cause. They got the cause wrong. So I would say, if your retirement account, which is going to be heavily, invested in stocks, if the stock market produces a real negative return, this is a financial investment. So you would want to then get out and get into a real investment, something physical. Okay. Remember, the key here is inflation. So the price of used exotic watches or pre-owned, right, will go up. The value of your car will go up. So you will you'll spend your money on physical, tangible things and less here. Okay. Now the interesting thing is, someone might argue that a Bitcoin is real. You don't physically have it, but you might say that is more real. But I don't know. We'll find out. But I would watch, for example, let me give you one more example. Okay, let's say my predictions are correct. The stock market is going to go up 10% this year. So that means from today we got to get our 5% loss back. By the way, it was 10% before. So half that loss has already been made back. And then and then we get back to zero, and the stock market's going to go up another 10% above the previous high, above the high watermark. Okay? So the stock market goes up 20%. My house is 10%. My house is supposed to go up 20%. but let's just say 15, which I think is probably more realistic, but certainly even 10, okay? Okay, my house, my real estate should go up 15%. Okay, what will happen, let's say the year after the stock market only goes up 5%? Okay, well, let's say inflation comes back down and inflation's 4%. So in real terms, you still have a 1% gain. You're richer than you were the year previous, but this is going to become much more attractive. Also, there's behavioral finance to this. You could even call it a game, because while this is happening, we know we know interest rates, right? This is interest rates are also going up. So as people realize the stock market's performing okay, and you got a lot of money tied up in it, okay? But if interest rates, if you expect interest rates to go up, and then in particular mortgage rates, and you understand that real estate's in that circumstance is probably the better investment, then you want to buy real estate fast, because every time there's a Fed meeting, mortgage rates go up and it costs you a lot of money. So now the real estate market, because people are trying to lock it in with cheap money, will go up even faster. And this is sort of like the dot-com days idea, not the 2008 crisis, but there was a time after the 2000s when the dot-com market dropped by 50, 60%. The only place to put your money was in real estate. And it got to the point where your house could double in value in 1 year. Now, the stock market was up 5%, but you were making, let's say, 50% a year in real estate. Okay? This idea that you can buy, let's say, new construction, let's say it's an apartment in an apartment building. They're still just pile driving stuff into the ground. You know, the building is just basically I-beams and some concrete, but it's not even built yet. And you buy an apartment for $500,000. By the time it's ready to move in, you sell your apartment, which you've never even seen, and you sell it for, $750,000. You make a 50% return, right? That's what people were doing. And we might kind of lean back into that. And we have a new bubble being formed right now. Okay. And you might see things like, let's say, maybe, because under the same circumstance, what you might see is, gold up, let's say 30%. And oil up again, right? Another 33%. Let's say the next 18 months. And in 18 months, I make 33% on my house. Okay? So you go house, okay, oil, what was this one? Gold, sorry. Okay. Meanwhile, the Fed is jacking up interest rates to deal with this, and that's what's pushing the house up. Okay. But this will slowly ebb. And this has happened before, and it'll happen again. Okay. It's happened before, it'll happen again, and the cool thing about capitalism is that it will fix itself if you leave it alone. But of course, we know the government's not going to leave it alone. To take a look at things, you're really worried that oil is near $100 a barrel. Here we are at 92. Okay? And what the government or what the media tends to tell you is that we're way up, the highest in like 10 years or some, stuff, right? And they'll say, and it's up 1,000% because oil was at zero. Remember this? Zero. Okay. Anyways, so they'll look at this and say this is crazy high. Okay. But if you just pop back a little bit, okay. Okay, this is like 110 is no problem. And we've seen 150. So is 92 really that crazy? Okay, this doesn't even get to a problem until we're at 111, for example. So you can mark this down and call this, at least in the back of your mind, you can remember. Okay, we can easily go to 111. Okay. Now, it'll take some time, but we're a long ways from unsustainably high prices. Okay. Isn't that neat? Now, just to put this into context, I remember when that happened. I remember where I was. Kind of neat, huh? So just always put things into context. And the nice thing is you have charts, which kind of makes it easy. You look at gold again. Yeah. Let me just save this without those Bolly bands. Save template. Simple kind of strategy. Can you do this for me, son? If you can. All right. This is gold. Okay. It was somewhere in this move. I remember walking around the floor of a trade show with hundreds of people walking around. And I had a bullhorn about buying gold. Buy gold, buy gold. It was like 650, 647 if I remember exactly. Isn't that amazing, huh? Cool. So when people ask you about gold, hey, should gold go up? Well, typically when I hear people talk about gold, they just, the answers are either stupid or so generalized and so basic, like when there's high inflation, you should buy gold. Yes, but I hope you appreciate sort of the better understanding. It's inflation relative to growth, and one measure of growth could be the stock market, because that's somebody's growth in their retirement account. And then you will see maybe this opportunity here. Okay. And then, of course, this move in here had to do with central banks trying to lower the value of their currency without crushing or, let's say, putting fake money into their vaults. And so, therefore, it was not reserve currency central banks in operation. Cool beans. So remember, today's a holiday. Be careful. You're going to have a lot less volume than normal. Unless you're a crypto trader, probably have more volume. But I think most people are going to work today. Just the bankers are, It's a banking holiday and a market holiday for traders. So, so I don't know. You won't have retail traders trading Bitcoin today, but anyways. So peace on earth. May the pips be with you. May your profits be above average. And if you're in my day trading group, I will see you this evening. And for everybody else that are subscribers to this community, I will see you tomorrow. Take care.